our base view is that U.S. tax reform is going to have a bit of a positive impact in the U.S. At the margin, it means slightly strong growth in the U.S., slightly strong growth in Canada, which is our view. The question it raises from a public policy perspective, in Canada in particular, is whether or not the sharp reductions in corporate income tax rates that we've seen in the U.S. Are going to lead to competitive problems for our industries. Can we compete? We think so. Clearly, we're better off in a world where we have a significant fiscal advantage. That appears to not be the case anymore. So investments are made on the basis of kind of pure fundamentals, if you will. And there's still a tremendous amount of things going for the Canadian economy that make it an interesting investment opportunity for investors. So we're not particularly worried about that. But even if we were worried about that, our fiscal situation by and large is much, much, much better than it is in the US. So we have an ability to compete on the tax side if we wanted to. What it does do, though, it speaks to some of the measures that have been put in place by various provincial governments that, in the eyes of business, make doing business more challenging. That's certainly the case in Ontario with the minimum wage increase. Whether you're for it or against it, this is clearly an expense for businesses. So you raise effectively the cost of doing business in Ontario, and other provinces are doing this as well, at a time where the U.S. is reducing business costs in a very significant way. So clearly that's a concern. That's something that needs to be watched. Coming back to an earlier point, which is there's scope in the federal tax code and the provincial tax code to do something about that if we were to find that this is having a big impact on us.